Welcome to Trading Lounge and the Australian report for Monday, August the 2nd. So with the ASX here, just on the daily chart, we're looking from wave 4 here as 1 and 2 and 3 and 4 and 5 up here. So we're looking for 5 waves up here to make wave 3. So we need to understand this little section here and also our levels as well. So let's go in and take a look at that. I think on the intraday we could start on the 4-hour chart where we've been starting. So there was a little bit of a hiccup here, and a little bit sort of unusual to have this correction here. I noted it was in 3 waves here, so that was cool. It didn't pull back to its 61.8%, so that was a one thing I was a little bit concerned about. But I have to bring it over here now. So this would be the A wave, and then 3 waves for the B wave, and down for the C wave. But I also must point out too that because of this particular structure now, probably not the case, but if we take that low and that high there, that would leave the 61.8% retracement level. So it's possible to pull back to that point. Okay, so it's possible to have wave 2 here with this is 1 and 2 here and 3 and 4 and 5 here. So we just need to be a little bit careful about that. I don't think it's the case because we've come so high. When it opened this morning at 8 o'clock, it opened high and traded down. The futures always likes to close its gap. So if you're trading this market as a CFD, you really need to have a futures chart, because with the futures market, there's a buyer and a seller for every deal, every trade that's made. So those futures contracts, each contract needs to be matched at the end of that particular quarter, at that period. So gaps tend to be covered in the futures market, even if it's 1 point and it's a 1 month away. Don't forget about that 1 point gap, because it will create a target for you later on. Anyway, the other point that I want to make here is that even though that we got this sort of 3-wave move here and then down again through here for that, what it does do is it makes all of this pattern here a corrective pattern, a bullish corrective pattern. So that means that at some point we should end up higher up here for that. It's not like an ending pattern. So the only thing here is we just got to be careful that we don't get this down here as well as an ABC pattern. So this would be down here, and this would be the A wave, the B wave, and the C wave down here. That's what I'm a little bit haunted about. So we'll need to just sort of understand that a little bit more as well. Iron ore was down quite strong, so it's nearly at its lows. It's still got a bit more to go, but it shouldn't really affect this market so much. Let's just cruise in and have a little look at this here. So yeah, I'm looking at it now like this is an A wave, a B wave, and a C wave here, and it kind of looks in a little bit. It looks proportional. Do you know what I mean? Like the A wave has got some equality to wave C and so on. So they're not really out of whack. So I think that we should be pushing up here. So what we can do here is that it does appear that from this low here we could go 1 and 2 and 3 and 4 and 5 up here. So looking for a retracement back. And the Friday didn't close strong either, so that tells us that we need to be careful about the Monday as well. So we could come back into this area here before moving up again. But certainly it wants to try to close that gap if it can, but always be aware of gaps. I mean, I've traded a lot of futures contracts with this market, and I can tell you that the gap needs to be covered. And as you know, with some markets, some markets create gaps and they don't get covered, so it's a little bit confusing. But I think the best way to handle that sort of that theory about the gaps in the market is just to go back over the history of that that particular chart that you're looking at, that particular market, and see how many times it covers its gaps. And if it covers it 7 out of 10, well then you know, there's a 70% chance that it covers its gaps. But this market, on the futures market, it will cover its gaps. And it can be a month away or 4 months away or 6 months away. And it doesn't it can't be 6 months away, but it will cover them even to 1 point. It's pretty amazing. I used to track them all. Okay, so yeah, that's what it sort of looks like at the moment. So yeah, let's just go to the tick chart and see if we can, or 15-minute chart. I think we're also looking at. I mean, the first thing that sticks out to me here is, see all those open and closes in there? That's the support. So 47.20 as the support. And of course, we also need to have a bit more understanding about this here. So yeah, we shouldn't really see it below this here. And the other point is that trying to find a way in now for this that would make sense. So given a little bit of time here, you know, the time the rest of the market opens and so on, see if you can see if there's something like that, and then you'll be able to draw a line through there or go along here and that sort of thing. But yeah, as far as the upside goes, it's looking quite good. Okay, let's have a look at our banks. So for CBA, it's our first one here. It's really just the finance sector that we're kind of considering here. So we're not at our top up here just yet. So we're looking at wave 3 and 4, which is in line with the ASX200, of course. And we do have our 5 waves up there. The question that we've been looking at is that, will it pull back into this box here? So that's what it could do over the next few sessions, unless it finds some support on the 100 and takes that top out, which would create the long trade at that point. Okay, so you don't really have to do much. If you see it up here, then above this high here, then you can trade long on that. And ANZ is much the same as well, so it would leave most of the other banks the same as well. It still really hasn't pulled. It's probably done its ABC in here, but yeah, just maybe expect a little bit more here. But as soon as it breaks the 28 there, that creates the long trade for that, and then we can start looking up towards, you know, above 30 for that. Now, the resource sector. So iron ore is just the 4-hour chart. It still has further to go down. It looks like here that we've got 1 and 2 in here, and 3 here, and 4 here, and 5 coming down. So there's probably a little bit more to come down here for this. So we'll just basically watch it. But what I could say is that when or if and when the market finds support on the 1000, then we know that we will be on our way at that point. So we'll need to see that as support. But during the week, we'll try to pull this apart and have a look at the 5 waves within that particular structure there for that. And I want to go to what's next on our list here. CRUDE, I haven't really seen that. It's just the tick chart here, a little bit messy, but yeah, I haven't tidied this up at all just yet, obviously, but yeah, it's doing all the right things here since we spoke last time. So just got to get my head around that a little bit. I was just looking from here as 1, 2, 3, 4, 5 here, just keeping it simple, and 1, 2, yeah. So we could be there at the moment if that's 1 and 2, and I'm not sure about that in there. Not sure about that, but that's all 5 waves. So that gives us a wave C up there. Where does that leave us then? So we'll just go back to the, I think it's the daily chart that we're looking at. Right, this is where we've got to be careful here. So we were kind of considering an A wave, a B wave, and a C wave here. Yes, the market could just continue to the upside here, but we were just looking for 5 waves in that small move there. So we'll just watch it for a day or two and see what it looks like. It hasn't told us that it's bearish at this point, but that's where it would be at. This is where it would be at this point. This is where it can change. So just be careful of that. And where's copper? So with copper here, you know, I mean, I'd like to call wave 4 in down for here for that, you know. But it's very difficult to look at this as wave 1 and 2 here. I can count 5 waves up in this little area through here, but all of this here would belong to the same family, the same leg, so to speak, and then wave C here. So yeah, it just doesn't look like wave 1, so I just have to be extra careful. It does appear that we can count 5 waves up to this point here. So I'll just see how this goes at the moment. It looks like, I mean, it looks like that's in 3 waves here. So it looks like it's corrective and we will go up further. But yeah, there's not, you know, I mean, I like that as an impulse wave, of course, you know, but this here doesn't really finish off that well unless we can look at this as some part, you know, unless we should be looking at this as the low over here, you know, that's quite possible, looking at wave 4 low over here for that. And we just got some sort of truncated 5th wave down here. We need to look at this as a 4th wave here. And then down for the 5th. That's sort of possible as well. I'll just sort of see. I mean, our original idea was to see if the 10,000 would become the support. And also just to thank Andrew, who sent this through here, just pointing out that they're one of the main largest copper mines, yeah, well, the world's biggest copper mine, voted to strike, which is part of BHP Group, owns about half of it or something. So in Chile, so yeah, there is a strike there, and you can read this on Bloomberg articles. So, you know, that might put a bit of restraint on this morning. We'll see how this opens for the Monday. But yeah, I just think, you know, we're in a wave 4, so we just have to be cautious. You know, you always have to be cautious in a wave 4, and you need some really strong definitions to say that you're on, you know, that you're in, that it's finished. And the only way I can do that because of the structure is to have a nice support on trading level 1 here for that. Because that's where the resistance is. And, you know, the market can, by the looks of this here, it looks like the market will push up here, but we still need that as support because it can fade from that point, you know. That often happens. So that's why the classic trading level pattern becomes quite useful, let's say, at this, you know, at this space here. So, I mean, if we're going to go along here, we'll just bring the entries down from the top here into here. And if they don't get triggered, they don't get triggered. Do you know what I mean? So it's pretty sort of robotic in a way, which is quite helpful for us emotional human beings. So yeah, I just this little pattern in here, I just can't see it being wave 1 or 2. So it's got to be part of the B wave or part of this whole move down through here, and we got some sort of truncated ending for all of this here. So anyway, short term, it appears that it can move up, but at least it's stable against the other guys. And I don't think gold has moved much. But the thing with gold, it hasn't found support on top of the 1830, which is really what we wanted to find at this particular point. So until that's done, then we'll probably need to look. We haven't even made a new high here yet. So, and it's left us with an A and a B and a C up here for this. I'll get into more on this in the gold video, but yeah, that 1830 hasn't found support. So let's have a look at our stock. So BHP in the US is the ADR. That was down down a couple of percent on Friday. So it does leave this triangle pattern still in play here with wave 3 here as an A and a B and a C and a D and an E. I can understand wave 4 being over here as some sort of 1, 2, 3, 4, 5 here. That's possible. But we'll just see how this goes. I mean, look, we'll just expect it to vibrate and react from this major trading level here. So we'll just give it a bit of time and we'll see what, we'll see if crude turns. We'll also see what copper does as well within that space. And obviously the other markets are going to be like that. So when we have a look at our local BHP, which is traveling very nice, I must say, it hasn't really established support on top of Group 1, which is 53, and that's what we'll be looking for. So that's what the whole thing will be about, really. You know, in the slightly sort of bigger picture here, will that 53 become the support? That's what we're looking for. If the 52 becomes the retested resistance, well, then we're pulling back into this space, into the 50 at that point. And Rio and FMG, they will be pretty much the same as well. Well, FMG was down nearly 5%, so that's quite on the Friday, so that was quite a move down, but we can count here as 1 and 2 and 3 and 4 and 5 here. So this 50-60% retracement level is here, but as a wave 4 here, we should see it just come back to the wave 4 of 1 lesser degree. So it's normally, you know, when you have a correction, when you see a move like that and you're long, it's a bit sort of frightening, but it's kind of good to understand that it's normally the A wave that's really sharp, you know, and then the B wave comes in and does whatever it needs to do, and the C wave is on a bit more of an angle. I mean, I'm probably overdoing it here, but let's just see how this goes. It's going to stick to the 25 here for a little while, so we don't have to worry too much about that, but it's doing all the right things. Of course, it would have been nice for it just to continue to move up, but we do have 5 waves from this low to this high here, which also brings in the fact that, you know, this is where we could also have a B wave over here for this. So all of this was the A wave here, an A and a B and a C wave over here for this, and have that B wave top there. So that is possible. So we'll just we'll see how that plays out at that point. And Rio. Yeah, so look, I expected to come back to 130. I wanted to find the support on it could probably come back to 128 or 126.50 or something like that, but it's got to come back and check on, it's got to come back and check this number. That's what it needs to do, and it hasn't done that. It came down here on less volume than the previous day. I mean, it's still a lot of volume, don't get me wrong, but it's still less, so we can view that as being corrective. But coming back into 120, 128, 126.50, I'm talking about group 2 in here, be something, you know, when we want to kind of establish it like this, you know, before moving off higher there. We didn't check on the Australian dollar as well, which is looking a little bit bearish. Let me find it here. So I've just relabeled it here. So from wave 4 here, we had wave 4 sitting here, by the way, but I think it needs to be here as 1 and 2 and 3 here, and 4 here and 5 here. If this market, now that it's got this here, because this would have, I mean, it looks like an A wave, a B wave and a C wave here for wave 4, and seeing wave 5 come down, one more low to come into play here for this. So I think that's sort of where we are here. If this top here gets taken out, then you can go long from that point, because that would invalidate that. But a move below this low here would also confirm that this is the right count at this point, and we would need to look at it like that. So we're not quite there yet with this. I don't think they'll need to push straight up from that point. I did go in here and have a bit of a look in here, and it is possible to get 5 waves out of this here. So yeah, I think that's sort of where we are with that. And the US dollar index, this is a 1 hour chart, and this is from the top here. So we don't have 5 waves down here just yet. I mean, we've only got part of an impulse wave. It looks impulsive, and we would expect to bounce off the off the 92 area here, off that level. So we'll just see how that plays out for this. We've got, we can look at this as wave 1 here, and we can look at this as wave 1 and 2 here, and 1 and 2 here, and this will be a 3rd wave in here. So this will be a 4th wave here. It will probably have to play out in some sort of A wave, B wave, and C wave here before going down further from here, because it's just got one move here so far. There could be an ABC going up here, but I haven't really worried about it because I mean, even as a corrective move, it's not finished down. Even if it was bullish corrective, it's still not finished. As an impulse wave, it's still, it's still in its early stages. It's in its 1 and 2s and 1 and 2 and 1 and 2. This is the first little 3rd wave we've had here. So we could look from this top here as 1 and 2 and 3 and 4 and coming down for 5 here for that. But yeah, should edge lower. That's the takeaway from that. Alrighty, I'll leave it at that. That sort of covers it a little bit. So yeah, just to recap a little bit, we need the banks to push up. So if you're going to go long in the ASX200, you really want to keep an eye on CBA and ANZ. You want them to you want CBA to push through the 100. ANZ to push through the 28. You need those banks on your side, and you might get them too, because the resources are pushing lower, and iron ore's got a little bit lower to go, and we need to see about the other resources, how they're going to play out. Alrighty, cheers.